Difficult, challenging, even strange are some of the words a lot of CEOs that we've spoken to have used to describe really what's been an eventful 2020 so far. It's been difficult for you guys as well. How's your team, and what assumptions are you making moving forward?
Well, look, our team is in good shape. You're exactly right. It's been unprecedented in many respects for us, not just having to deal with the impacts of COVID, but also the OPEC plus one disagreement on what supply should be in the market. But look, we've responded well. In these times, you can only focus on the things you control, and that's making sure the safety and well-being of the team is in good shape. And then, of course, we run our assets as well as we can. So we've preserved cash. We're in good shape as we sit today, and we're starting to see green shoots. So, the future is looking a little brighter than what it was a few months ago.
And we understand you are looking to add to those assets. I want to get straight and fact specifics here. You are taking a closer look at Chevron's stake in the Northwest Shelf. My understanding is you have preemptive rights to that, and we also understand that Chevron does want to divest. Is that simply, Peter, a matter of timing more than anything else before you can bring those assets under your roof?
Well, look, it's interesting. At this point in the commodity cycle, generally what you'll find is it's best to invest in assets that are already developed and already flowing. So we're in a situation today that we now have two preemptions in front of us, one in Sangomar in Senegal, and of course potentially another one coming through on the Northwest Shelf sometime early next year. So, the landscape's changed significantly for us as we look at those assets, and of course assets that you are already in, you understand the best. So we'll look at the valuations and then we'll make our decisions.
Peter, are there other opportunities you're looking at, and is there any sense of a time frame you can give us in terms of deal making?
Look, I think everybody, to be honest, that has strength in their balance sheet will have their radar out looking at assets on a global basis. And there's probably two sets of assets. There's obviously companies that are finding it difficult and may find it better to be part of a different organisation. And then there are assets that are being shed as major companies in particular review where they want to put their capital allocation over the next few years. So, look, there's not many of those have come onto the market yet. Of course, the largest of those is the Northwest Shelf asset that equity that Chevron owns. So we're hopeful that more of those will come onto the market, but really it's going to be up to the current owners to decide that.
What do you see as the main driver behind the recent improvement in the LNG market, and will it be sustained, do you think?
Well, I think the fundamentals are coming back into the market. What you saw in April and early May, in fact, was a complete dislocation from the fundamentals of the marketplace. And, I mean, there was good reason for that, and unfortunately it just coincided with the period of time where buyers set their annual delivery plan. So buyers basically said, look, we don't want the cargoes at this point. So they're able to do that through their contractual flexibilities. So those cargoes went out into the free market and then needed to be snapped up. LNG is not a commodity that you can store for a long period of time. So, basically we just had the market being flooded. The fundamentals are coming back now. We're looking at like everybody, we're looking at the driving miles that people are moving. We're looking at the response in Asia. Asia's recovered very well compared to Europe. And so those fundamentals are coming back, and OPEC is being disciplined. So, as I said, we're hopeful that the recovery that we're expecting in Q3 is going to be real. Today, we would say that's happening. And then, of course, we've got a good trajectory through Q4 and into early next year.